I want to first of all get your broad view on how it took off today. Were there any hitches? What was the experience like? It's historic and many people are talking about it.
Yes, indeed, it was historic, and we had all been looking forward to it. So there were no hitches whatsoever. We were all able to enter our codes. The market makers entered their codes in good time, and the market was receptive to the whole idea. Like I mentioned, we had all been anticipating it, and the takeoff today was very smooth.
All right, and maybe we should talk a bit about some of the companies that you are involved in, because I know Capital Bancorp is making market in, I think it's 2 stocks, PZ Cousins and Presco. Speaking about Presco, it's not a stock that is very liquid, I mean, historically speaking, but can you just talk a bit about your experience trading those stocks today?
Well, it wasn't liquid like you mentioned, but I discovered that as I commenced trading, the orders were coming at a price that the brokers and the other investors were comfortable with. So trading Presco was really not a challenge. And remember, the market maker is actually supposed to provide liquidity in the illiquid stock. Right. That's where the market makers are most required, not in the liquid stock. So there were no challenges. We provided liquidity as best as we could, and we traded quite well on Presco.
And PZ, because I know that is a stock that is, I mean, the interest for that is a lot more, but your thoughts on how the market received that today?
Well, generally, the market received the market making well. Like I mentioned, the volume actually traded today was about 43% higher than what was traded yesterday. So you can see that already the market making is beginning to have a great impact in the market.
Okay, I know that for now it's restricted to only a few stocks, and hopefully it will be expanded to many others going forward. But your thoughts on the impact that this is going to have on our market, broadly speaking? Give us your thoughts on that.
Well, like you mentioned too, we're starting out with a few stocks, but in a period of 6 months, the market makers are expected to actively start making market in all the stocks in their respective baskets.
Right.
So over time, what we expect to see in the market is increased liquidity, moderation in price volatility, and orderly markets. And then over time also, investors' confidence will begin to build up, to improve, because they then know that there's always a two-way quote for whatever stock they have. So the current challenges that are experienced in some very illiquid stocks is expected to ease off over time.
I think you make a very important point. Sorry to cut in there. I think you make a very important point in terms of building confidence, because we know right now this market is dominated essentially by foreign investors. The retail investors on the local front are still staying on the sideline, generally speaking. Your thoughts on the impact that this would have psychologically for retail investors?
Well, I would say we are already even seeing the effect.
Okay.
Because you understand the rally we've been experiencing in recent times. And as a stockbroking firm, we've observed also that the local investors are getting interested, because the number of orders you get from them is increasing on a daily basis. So it's not going to be solely dominated by the foreign investors. The local investors are beginning to show great interest in it. Remember that the all-share index has already crossed the psychological 25,000. So investors are really looking forward to a good time, and we expect the year to end strong.
Well, we look forward to that, and we certainly hope so. We've seen this market struggle for so many years up till now. Okay, now let's come back to maybe if we can talk about some specific stocks. The likes of Guinness Nigeria here, for instance, beyond the introduction of market making for select stocks, we're also seeing some stocks where the number of units required to move the share price has been reduced from 50,000 to 10,000. How significant is that in your view in terms of driving the market?
Thank you, Wole. Well, the 10,000, the reduction from 50,000 to 10,000 only applies to some high-price stock. I think about 9 of them, and Guinness, Nestle, Nigerian Breweries is among those 9 stocks. And we think it's a right decision that will move the market forward, because ordinarily, if you try to move 50,000, use 50,000 units to move the price of Nestle, for example, you'll find out that it's not quite easy to do, because it means you have to invest quite heavily in the stock. But with the reduction to 10%, you will find a significant improvement with the price movement going up or going down, because definitely the market is expected to act in both directions.
I think one concern that some investors may have with the kickoff of market making in Nigeria is the risk that the market makers themselves are taking. And can you just comment on that? To what extent is that risk mitigated in terms of maybe capital requirements and things related to that?
Yes, we're taking risk, but then there's always return. Wherever there's risk, there's return. And because we are aware that we are not just looking at the return, but we're looking at the long-term benefits for the capital market, the Nigerian capital markets. So you are willing to take that risk, especially since the risks can always be mitigated. And there are plans already, there are measures in place. All of the market makers have put in measures to mitigate these risks. And the regulators too have been quite helpful in this regard. So I would say the risks are well mitigated.
Well, we certainly hope so, and we look forward to seeing the impact of market making in our market. Thank you so much, Banke, for joining us on CNBC Africa, and we look forward to speaking to you sometime soon.